Hi everyone, welcome to my channel. In this video, I'm going to talk about the different lease type. In commercial property, if you want to invest, then you need to understand the different lease type and more importantly, what is it means. So this video is going to help you to understand this. If you want to buy commercial property, if this is your interest, then by all means stay till the end because you are going to learn quite a lot of things. That being said, let's start. Alright, different lease type. Now the first lease type that we will talk about is the gross lease. If you own residential property and if you are one of those landlords, then you know that what gross lease is. Residential property lease is gross lease. It means that all the expenses is paid by the landlord. That's it. That's what gross means. Like you get gross rent and every other expenses is paid by the landlord. Tenant just pays the rent. That's it. It could be 500, 600, 800 per week rent that they will pay every week. And you as a landlord, you need to pay all the expenses such as land tax, your council rates, water rates, insurance, management fees, maintenance, everything, every other expenses would be paid by the landlord. And this is called the gross lease. Now the next part of that is what I call net lease. And the net lease is where you get rent and all these expenses I just mentioned, these expenses will be paid by the tenant on top of that rent, which is why the rent is called net. And the net lease structure basically means that the tenant pays all these expenses called outgoings and the landlord collects the rent, and after collecting rent, pretty much all their expenses is their mortgage payment, and pretty much that's about it. Depends, and that's how the net lease is. It's also often referred to as triple net lease, and the triple net basically mention that land tax, all these expenses I mentioned, everything is paid by the tenant. As a commercial property investor, you would always aspire to have a triple net lease. If you have a triple net lease, then your life is pretty smooth because all you are getting the rent and you're paying the mortgage, everything else remains in the bank account. So if it is a positive cash flow, then of course you are making more and more money because all these expenses. So that's the difference between residential lease, which is the gross lease in general, and the commercial lease, which is in general I'm talking about the net lease. Commercial lease can be a gross lease as well. In that case, you need to read through the lease. You need to understand that whether it's a gross lease or net lease. There are another type of lease that is in between, which is why it is called a modified gross lease. What is a modified gross lease? As it says, it's modified, right? It's neither gross nor net. Why? Because when the lease was written, it was given something like, okay, I am going to pay the rent this much. On top of all these expenses, I will only pay certain part of that. It could be like, oh, I will pay the council rates, but I will not pay the insurance. I will pay the management fees, but I will not pay the land tax. Like these things, or I will pay these out of 4 items, all these I'll pay, but I'll only pay a cap. Like let's say up to $1,000 of the council rate I will pay, up to $2,000 of the insurance I'm going to pay. This is called the modified gross because it is the tenant is not paying everything, which is why it is not net, but it is they're paying something, which is why they have modified the gross lease and paying. It's better than the gross lease. Of course, you can recover some of the amount and you need to read through the lease and understand that. But more importantly, that modified gross lease is better than the gross lease but less lucrative than the net lease or a triple net lease. So if you want to buy commercial property, one of the things that you need to understand or you need to read through is the lease, and in that lease you need to see by after reading the lease that whether it's a gross lease, whether it's a modified gross lease or it's a net lease. Agent might say that, oh, it's a triple net lease. Agent might say that it's a modified gross lease, but you need to see what is written in the lease, and this is what very important. It's not what is being told, it is what it is written in the lease that is important. So if you want to buy commercial property, if you are looking for buying a commercial property, if you are checking a commercial property which you're going through, make sure that you read the lease and conclude that yes, it is a modified gross lease, yes, it is a gross lease, or yes, it is a net lease, because that the lease after buying that property also stays. Let's say if you have a 5 years lease and it's only 1 year is being exhausted and the remaining 4 years, you have to honor that. Even though you're the new owner, you can't just ask the tenant to move out because they already have the lease in place. Hence, whatever is written, that is going to be there for the next 4 years. Yes, once the lease expires, then you can change it and all sort of things, but you also need to say about the options, what options has been put together. An option is basically tenants right whether they want to continue even further 5 years, 10 years. I'll give you an interesting lease review what we did. We wanted to buy one of the properties and we ended up not buying it simply because that lease, the way it has been put together, it's a 5 years lease, but it put 5 is to 5 is to 5 is to 5. So it's total 25 years, and in these 25 years that there is not a single time there is a market review, which basically means that every year the rent is only going to go up CPI percentage, which is 3%, 4%, whatever the CPI it is. CPI stands for Consumer Pricing Index. Now, why didn't we buy that? Because then what basically we are project for the next 25 years, if the market goes up, if the rent goes up, we cannot increase the rent because the tenant has the right to take that options 5 is to 5 is to 5 is to 5. And 25 years is such a long time to hold an asset and not able to increase the rent, because rent in general always goes up way more than the CPI. So after 5 years, 10 years, if there was a market review, then perhaps we would have bought. Because there was no market review, we did not buy it. And this is something that you need to understand, because our way of doing is that to look through the future, for the next 25 years, if you cannot increase the rent other than the CPI increase, then your asset would be super undervalued. And 25 years is such a long time. So we ended up not buying that property. So this is something that's how the gross lease, modified gross lease, and the net lease comes in, and also the market review and the tenancy options. I hope you find this videos helpful and you got some idea about how to read, what to do, and what is modified gross. By all means understand this more, and then only you buy a commercial property. Lease is the most important part in a commercial property, and if you understand, if you know these things, for sure you would be way better than somebody who would just blindly buy. Thank you so much, and I'll see you next time. Bye bye.